let's just jump right into the market outlook. We've been very cautious on the market the past 2 weeks as we've seen controlled selling, at highs, along with, some problems under the hood. We saw stocks not moving as well as the indices would make it appear they're moving, which we now can see after today's sell-off. That was the big dogs getting out. That was smart money selling their positions into that strength. So that now we just slam it and retail gets killed. We have done a great job of standing out of the way of this market the past 2 weeks. I've been saying a lot. It's not how much you make, it's how much you keep in these markets. And, just proud of us as a collective, the way we kind of handled the sell-off the past 2 weeks. Just, not really getting hurt at all, where, previous times in my career, I'm trying to push it every single day, and I would have gotten crushed, into these last 2 weeks. Now, accounts sitting at highs, we're sitting pretty, we're ready to go. Mental capital's at highs, so, we handled this pullback very, very well. From a market outlook standpoint, we finally see this trend break, this huge trend that's been intact, since February of last year, but really since, almost October of last year, since that last September sell-off, and now we're getting another September sell-off. So, this is big, time will only tell time, if that makes any sense. But, we just got that first pullback, now it's wait and see mode. We don't need to be aggressive. The market's telling us it's more of a risk-off time. And, you look around at world markets, we have the China stuff going on with Evergrande and everything, but we look around to world markets and it's just, a decrease of risk all around the globe. We look at international markets here, all super red. U.S. markets, super, super red. This is fixed income and bonds and stuff. We don't expect that to move too much. But we're just seeing, a worldwide risk reduction. You're seeing it in the crypto space, in equities, seeing it everywhere. So, when that happens, it's time to chill. It's not time to be aggressive. And, that's kind of where we're at right now. What are you thinking over there, Ben?
So the last couple newsletters we've been, again, talking about being hands-off, and we've been talking about that kind of maybe this shift out of this, 3 out of 5 days new all-time high market into more of like consolidation type market. And like you mentioned, kind of since last October, September, we kind of saw a little bit of a consolidation going, in that little 3-month period. I kind of circled it here to kind of represent what I'm talking about, and that expectation of maybe we start to shift into something more like that of a range-bound market with the highs in the S&P being 450 and the new area of support that's to be determined. For now, anything above really 400 in SPY is pretty much fair game. So if we were to trade in that range, say 400 to 450, that could set us up for a bigger move, to SPY 500, at the end of the year or into the new year. But like you said, definitely being hands-off, being very selective, and sitting with cash has definitely been the profitable move.
Right. Sometimes the best trade is no trade.
100%. And again, going along with that kind of consolidation talk, we've seen this all year in the mid caps. We've basically since March they've been flagging at highs, and we saw the same thing with small caps. So we've seen these two portion markets, kind of flag out and consolidate, where the broader markets like the SPY and NASDAQ have just continued to break out. So my thoughts are we kind of shift into a similar market like we saw with the small mid caps, where we just trade in that range. And we'd be looking to buy up off of support, but we just don't know where that's going to be just yet.
Right, and the unfortunate part about going on that run that we went on this year is that now that we're finally breaking down from it, as you said, we could, if we dealt with a range-bound market for the next year, that would be healthy consolidation in the S&P. As unfortunate as that is to say, but that's the reality of the situation.